Hey everyone, Couch Investor back to another video for today. So I just came off the earnings call. Well, just came off as if I'm an analyst or something. No, I listened to the earnings call. We're going to talk about Intel in this video. Unfortunately, I don't really have such good news for Intel holders, myself included. Again, not a good quarter. They know it, we know it, everybody knows it as well. Now, what they're saying, and we've seen this a bit with what Microsoft has said with regards to Azure. We're probably going to get more information as AMD, Nvidia, and all the other semiconductor companies will report as well and see if it's just an Intel problem or just an overall industry problem. They talk about more weakness in the first half of 2023. That's why the outlook is, well, worse than expected. But that's not the whole story here. They missed on their own expectations as well. They came in with revenue fine. They came in line at the bottom half of what they expected. But when you talk about earnings per share, they missed that. They missed on margins as well. So we're going to talk about all of that in this video and share my thoughts of what I'm doing with my position with Intel. If you're interested in that, hit that subscribe button and like this video. We really appreciate that. And if you want to support this channel a little bit further, you can check out the link down in the description or in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So let's start this out with the executive summary. So Q4 revenue at the lower end of the guidance range, executing on our commitment to manage costs. So they're saying here that they're driving to deliver $3 billion of cost saving in 2023, which should help profitability of the business, which, as you will see, the outlook doesn't really look that great. Then they say here $8 to $10 billion annually exiting 2025. Let's see what happens. They still have 2 years, more than 2 years actually. Then managing full year 2023, net capital intensity below or just at 35% while preserving critical investments. I'll say this once, I wouldn't mind if they stopped paying a dividend right now. It's billions of dollars that can save them a lot right now, and probably they could use that. I'd rather them use the money for growing their business, get back to that leadership position than to pay me dividends, because remember, you're getting taxed twice if they're paying dividends. So yeah, that's just me. I know a lot of funds, a lot of, let's say, older investors have Intel because they're paying a dividend. I've enjoyed the dividend payouts right now. It just buys me more and more shares. But to be honest, if you're looking at growth, they could use those billions of dollars that they're paying out each and every quarter. So there is that. Continuing here, so volatility across all markets. They expect 2023 PC total addressable market at low end of 270 and 295 range. First half 2023 server consumption TAM down year over year. We've seen that a bit with Microsoft already, Microsoft Azure. Let's see what Amazon reports. Inventory digestion, sell-in well below sell-through. Okay, I think we've heard that one before. Then long-term sustainable demand, semi-X memory to decline mid-single digits approximately. PC usage remains strong as the economy reopens. Server total addressable market expected to return to growth in the second half of this year. Okay, I can tell you guys one thing already. My next laptop will be the Razer 18-inch with Nvidia RTX 4090 and Intel's 13th gen CPU. Whenever that arrives, I'll make a review of it and see actually if those chips are worth the money. Then they talk a bit about their strategy here. I'm not going to go all over this because it's always the same thing. So now, Q4 financial highlights. Revenue $14 billion. Remember when revenue was closer to $20 billion? Yeah, good times, and margins in the 56% as well. So revenue $14 billion. It's down 28% year over year within October outlook range. Yes, at the bottom of that outlook. Then gross margin 43.8%, down 12.1 percentage points year over year, 1.2 percentage points below their outlook. Earnings per share of just 10 cents, down 92% year over year and 10 cents below their own outlook. So profitability here is really thrown out the window. Then as for the full year revenue within their outlook, is down 16% year over year. Gross margin, that's below, so that's 47.3%, down 10.8 percentage points year over year and 0.2 percentage points below their outlook. And as for earnings per share, $1.84, also 11 cents below their own outlook, and that's down 65% year over year. Now, if we go and look at at each and every segment, so the CCG, Client Computing Group, as you can see right here, revenue is down 36% to $6.6 billion. It's also down quarter over quarter. Last quarter was around $8 billion, so there is that. Operating margin here has come down to just 11%, $0.7 billion. Again, the reasoning here, lower revenue on PC demand softening, primarily in the consumer and education, and customer inventory reductions. Of course, with the 13th gen coming out, is already out. Let's see what happens. Those chips are in actually pretty exceptional computers and laptops right now. So let's see what happens. Of course, with the current macroeconomic environment, etc., times are tough. Then when it comes to DCAI, so Data Center and AI Group, revenue there is down 33% year over year. It's for this quarter $4.3 billion. The good news is that last quarter, Q3, it was $4.2 billion. So a little increase here quarter over quarter. We're going to give them that. And also, when it comes to operating margin, we're now at 9%. Last quarter, that was 0. So yeah, there is that. And then next, so Network and Edge Group, we can see here not much movements here. Revenue is just down 1%. Operating income down 84%. Margin here is 3%. So not much happening there. And then the only positive thing here, and that's with regards to Mobileye and a bit of the graphics card as well, but Mobileye reported earnings as well yesterday, and they beat top and bottom line. So of course, that's a positive, as you can see here. Revenue, record quarter again, record year. So revenue is up 59% year over year. Operating income is up 71% year over year. So pretty good there. When it comes to IFS, so Intel Foundry Services, that's up as well 30% year over year as we come to revenue. Operating loss is driven by increased spending to support strategic growth. And when it comes to Accelerating Computing System and Graphics Group, a bit better as well. Revenue is up just 1% year over year. A bit losing my voice here. Lower operating loss driven by less inventory reserves. So small business segments here, but at least they're performing okay. Of course, this has been spun off, Mobileye, if you didn't know. And then, of course, the biggest shock here, and that's probably why the stock is down close to 10% right now, is their outlook for Q1 2023. So they expect revenue between $10.5 and $11.5 billion, down 40% year over year. Gross margin 39%, so under that 40%. It's down 14.1% year over year. It's just horrible. Then earnings per share negative 15 cents. I repeat that. Intel's earnings per share for the next quarter is expected to be negative 15 cents. And so we are entering the period of Intel being, not profitable right now, investing a lot. Demand is very low, highly competitive market. What's going to happen? What am I doing? I'll explain in just a second. So during the earnings call, basically to summarize it, they've had, a horrible 2022. I think we've seen that across the board, right? Not just for Intel, but of course with Intel already being behind AMD and Nvidia, for example, they have to play catch up, and playing catch up when the market is in a downturn cycle, it's not always great. They expect this to continue in the first half of 2023. So of course we've seen that with the outlook. Let's hope that we get better results. I honestly don't understand why they're not putting the bar lower than expected for them internally and then beating that. It's much better. It's been a couple of quarters already where numbers went great, but you can make bad numbers look better by just providing lower outlook beforehand or just reporting earlier, as we've seen with Nvidia, for example. Now, again, for 2023, I've said it from the start, I'm giving them time to execute. They've said it themselves, it's going to take time, and fine, these investments don't work overnight. But 2023, as I said, 2023 is the year where it's do or die. If you can't, by the end of the year, show us that you're entering 2024 much stronger than the way you've entered 2023, then there is an issue. There is a problem. Nice words from Pat won't help. Let's see what happens. I've seen reviews from the new chips and most of them are pretty positive. Again, I'll hopefully get mine. I don't know when that laptop is coming out. They said Q1 2023. So it should be in the next month or so. I'll review it, see it's good. Right now I have an Intel i7, but the 10th generation RTX 2060. So the jump will be huge, but I'm going to test some things out and see how that goes. Right now, I wouldn't mind if there is no dividend anymore, if that means that we'll see growth in the business much faster. To me, makes more sense. I'll pay less taxes because I have to pay 30-something% on every dividend payout. So there is that. But overall, bad quarter, bad year from Intel, worse outlook as well. We're entering a stage where Intel has become unprofitable. They've been investing a lot. Of course, there is these stories in Europe where they're not sure if they're going to build in Italy or not. They're probably playing a game there of, well, which country is going to help us more with our investment. Let's see what happens with the CHIPS Act as well. Again, to me, it's pretty clear. 2023 is do or die for Intel. After that, if they do it, great. If they don't, thank you very much. Thanks for playing, but I'll be out. Of course, do share your thoughts down in the comments below with regards to this quarter, your expectations for 2023. Let me know down in the comments below. And if you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.